and the land of the free. Hey, happy 4th of July. Just kidding, it's not the 4th of July anymore, but I hope you guys had a good 4th of July. I know I did. I spent the last several days, or all of the weekend, basically celebrating it like it was Hanukkah or something. I definitely turned it into a whole week celebration. Went out to karaoke with the wife and some friends, Thursday and Friday. Saturday, we did a barbecue, hung out with my family on Sunday, and Monday we did another barbecue and watched the fireworks. Some friends set off some fireworks, and we watched those. But anyway, I hope everybody that is in America that celebrates the 4th of July, I hope you guys enjoyed your time off. If you did get time off from work, I hope you took a break from the charts potentially to just enjoy family, friends, good food, and some bright things exploding in the sky. Now, in today's video, and also, I'd like to welcome you back to another episode of TA with MK. My name is still MK, even after the 4th of July. Today's episode, we're just going to quickly go over a couple of ideas as far as how I scalp trade. Wanted to explain on lower time frames kind of what I'm looking for as far as potential bull traps and bear traps go. I will be putting out a full-length video in the near future, in the coming days, probably later this week, that is actually specifically just about bull traps and bear traps and kind of how to trade them. But I'm going to dive a little bit into that today on this video. And if you guys are liking the content, as always, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. And now, first and foremost, it's important to put out this disclaimer that I, Mr. MK, am not qualified to give you financial advice. So none of the stuff I'm going to discuss in this video is, or never will be, financial advice. So manage your risk accordingly. Take everything I say with 1 or 2 or 4 grains of salt. And hey, just remember, I am not God. Well, I don't think. Alright, so with that out of the way, I want to mention a couple very important things as I give you kind of my strategy as it relates to scalp trading, at least anyway. And this can apply exactly the same on higher time frames and midterm holds as well. It's just obviously you have to be more patient and wait much longer for these things to develop. But if you have the patience and you have the alerts set and they do go off, and obviously at that point, those can be some of your best trades, because you can go a little bigger on trades that that took weeks to develop, if that makes sense. Like obviously scalp trades, these are things that are happening quickly. So I just wanted to show you in today's video on the smaller time frames, but this does not mean it doesn't apply to larger time frames. But with that, I wanted to say this. One really important thing that I implement when I do scalp trade is I like to pay attention to what the overall macro trend is, which in this case, we all know Bitcoin has been in a large downtrend ever since its all-time high last year in, mid-November, right? It has just been going mostly down with a series of lows and lower lows and highs and lower highs, right? So clearly, as I'm scalp trading, you always want to start zooming out to kind of see what the actual trend is, then zoom in maybe one more time frame to something like a 4-hour, see if that also matches up with the macro trend, or are we in like a reverse trend inside of a bigger trend? And that'll make a difference on what scalp trades I decide to take. Now, obviously, overall, we're still in a huge downtrend, but over the past, several days to even a week, we've been creating somewhat of a smaller time frame uptrend. So that makes me tend to trade both ways during those time frames. However, I'm going to always favor to the short side because we're in a bear market and there's just a lot less risk trading shorts at the moment than there is trading longs. To me, there's a lot less risk that Bitcoin is going to suddenly decide to pump to $30,000 while I'm making a trade versus the the chance that it could all of a sudden plummet down to 17K, right? So keep that as the number one thing in perspective as I go on with this. The number two thing I wanted to mention is that I get more aggressive on Monday through Friday as far as my scalp trading goes, and the obvious reasons for that is traditional stock markets are open, meaning that your institutions are trading, your bigger wells, there's just a lot less scammy price action. And I also love to use, this first chart I'm going to show you, which is the ES1 explanation point is the ticker. It's the S&P 500 E mini futures. It's a chart that I like to use to try to front run moves out of Bitcoin. We all know that Bitcoin is so highly correlated these days with the stock market that, you know, if it's going up, Bitcoin's usually following it. Not always 110% or 100%, obviously, right? But for the most part, whatever moves it's making can kind of give you an idea of what to expect out of Bitcoin. And I just feel like you have a higher edge, you know, a better edge Monday through Friday. And in this particular chart's case, it's actually only Monday through like Friday morning. So I think online, if you Google it, it will tell you Monday through like Thursday, but it actually goes until in the middle of the night, I think, or early hours of Friday morning. And then of course, around 2 o'clock on Friday is when the SPX, or the traditional S&P 500, closes. So those are the two things I just want to quickly get out of the way, and let's move on. Now, one super important thing to consider when trading, at least in my eyes, is that, you know, I'm a pattern trader. I'm sure you've noticed on a lot of my videos, I post patterns that I'm trading, but at the end of the day, price action, support, and resistance, I often mention, matters the most to me. And when you're not having a ton of volatility per se, or the market's just being overall boring, which it has been for several weeks now, then you're looking more to trade ranges. I don't talk about ranges a ton on my channel, but I need to start talking about them more because they are some of the most powerful ways to trade, especially when the market is being boring. Because often if the market's being boring, your price action will just trade within a range, and this ES1 mini futures is a good example of that. So obviously back here, and I think I mentioned this in a previous video, I was tracking this inverse head and shoulders, right? I also was tracking this potential symmetrical triangle that we were in for a breakout, so on and so forth. Now at the time, there wasn't really much of a range developed at that point, so I was just trading those patterns, looking for some sort of an edge to the upside to open up a longs for Bitcoin. Of course, I knew from that point that we had this upper resistance, which at that point I would have considered the top of the range. Now, once we did put in this double bottom down here, which became the head of my inverse head and shoulders, that obviously became the bottom of the range. And then once we started, especially now, ever since around the end of June, we've been kind of going sideways. Then we kind of established the mid-range, right? So you have the range high, which is this whole level up in here, which it hasn't interacted with a whole lot outside of this major rejection, and of course this price action here. You had the mid-range, this is where we've been chilling right now, and you have the range low that's been established down here, right? So I cleaned the chart back up and just wanted to mention that so that I can say this. So step one of my trading or scalping strategy during the week, when I can use the SPX, right, or the mini futures in this case, is I'm looking for moves where it's potentially getting rejected at, you know, a certain support or resistance level, or finding support, or flipping, you know, support or resistance, right? So in this case, you know, I'm going to give an example of back here where on July, let's go with the 5th at around, let's go with, okay, let's go right here. July 4th at 23 o'clock UTC time, right? Price action had found its way back up to this zone that had already been acting as resistance once, didn't quite make it here, but obviously you can kind of see that was resistance, resistance, resistance. And, you know, it was up here peeking its head, looked like it was breaking out because previously, you know, it had found temporary support there. We won't really count that, but obviously it had been rejected twice right here at the bottom of that range. So you're looking at that as a potential, you know, is it going to break out and hold, right? So you would open longs right there with tight stop losses, assuming it could flip that level and then trend up to the top of the next range, which in this case would have been the range high, right? Well, ultimately it rolled over, so you can hurry, you know, your stop losses would get hit, small percentage loss, and then you just learn to trade the opposite way. Now, I wanted to show you that to kind of show you what Bitcoin was doing at the same time, because once that lost that level, which it lost it right around, so 23 o'clock, we'll remember that time for July 4th UTC time, and then 7 o'clock July 5th UTC time. Now we're over here on the Bitcoin 5-minute chart, which is usually what I'm on when I'm scalp trading. In fact, sometimes I'll even go to the 1-minute chart if I'm really trying to get data quickly to get in and out of trades, or, you know, try to nail my entry, so to speak. But you can see here that as that was trying to peek its head on the ES1, this is the first vertical line I put at the 23 o'clock time. Over here on the left, you can see that price action was trending up. It had just flipped a level right here as support. And, you know, it trended up over the next few hours after that and found resistance right here. This was while the ES1 was just trending sideways, kind of flirting with trying to flip that level from previous resistance into support. So Bitcoin, while people waited to see what it was doing, took a slow retrace here, kind of just went sideways. I mean, this was a retrace, but nothing major. Put on a small double bottom even here, which was bullish. Came up again. Well, you can see that again it gets rejected, and then right around the time that the ES1, which was over here, gets rejected, like as we mentioned, around the 7 to 8 o'clock time of UTC, you can see Bitcoin is beginning to put in a double top, right? So you could use that as a chance to front run the next Bitcoin move. So this would be the point where I would have opened up a short, and then then you just kind of wait for a pattern to develop. You can put your stop loss, whatever your risk management is or risk tolerance, but let's just say you put it up here about 5% or 2 or 3% above this high at around 20,500. Maybe you go up to 20,600. Here's your stop loss, right? And then you just let it ride. At that point, you're waiting for a pattern to develop. I was actually taking this short, so I had been waiting around to see when was the time to close this short. Obviously, this strategy only works if you have a lot of time to be able to keep an eye on the charts if you're doing a scalp trade. But eventually, it started to create this falling wedge we were inside of. And what I do, or at least what I like to do, is at first I have my stop loss up here. Once it lost this level back here, and this is the reason I have these green arrows. I had these green arrows back here before I even later updated this. This is a chart I just posted in my Telegram group a couple hours ago or an hour ago. Actually, even more recent than that. I think it's only been like 45 minutes ago. But anyway, even back here, I started to look at this little level as, hey, this is the point where if it loses this little support that was acting as temporary support, which it did here, then I move my stop loss to break even. And that's the thing, is anytime you open a trade, here's some important advice that I want to give you in this video. When you first open it, you never really know if it's going to end up being a really, really good trade or just a trade that ends up breaking even. But this is how you manage risk. As at this point, my risk was never going to be more. I was never going to lose more than, well, I didn't open the trade right there, to be honest with you. I opened the trade right around here after it started to break down, because I waited for the ES1 to confirm its breakdown, which happened there. So I think I opened it up right around a little lower than that, actually, about 20,000, just over 20,300, right? So at that point, the most I could have lost would have been actually like 1.5% of, in fact, I think my stop loss was even a little bit higher than this too. It was like 20,600. Okay, yeah. So if we go up to 20,600, that's about 1.5%. That's the most I could have lost on this trade. I was using leverage. Again, I'll put a link in the description for my video I recently put out of how to leverage trade on Kucoin. Please remember to manage your risk accordingly. But anyway, going back to my thought, got a little off there, was just this was the most I could have lost. I didn't have, you never have a clue when you first open a trade exactly how good of a trade it could end up being. But I did know right off the bat that that was the most I could lose. This was the next level down here. I was eyeing that if it lost that support level, then I moved my stop loss to break even at that point, right? In fact, I actually didn't move it to break even. I moved it to just below this resistance level here. So I was at that point still risking a little bit. I didn't want to get too close to price action because I didn't want a little miniature time frame bull trap to get the best of me where it came out of this pattern for a second or whatever, right? And so I moved it down to about the support level here, the previous resistance. So at that point, I was only risking about 0.5%. And then at that point, you just let it ride, let a pattern develop, right? I started looking for what the, this was a double top, right? So then you start looking at what the measured move for that is. I took this off the chart, but previously I had it on a chart that I posted, I think, in group. You had this, measured move. So at that point, you're looking for, okay, here's that target right there. So you could put a Alt H there for a vertical or a horizontal line. At that point, once that was hit, then you move your stop loss back down to just above this previous level. So now you're in profits. Now, no matter what happens, you're going to make a little bit of a percent, right? And this is just kind of how I manage these short time frame trades. Obviously, if this was on a 4-hour time frame and this was several weeks worth of data, I'd be doing the same thing. I would just have to have alerts set, and likely, even if it was to be playing out this way, it would just take a lot longer. It might take days rather than just hours to play out these same moves, right? Once that got hit, then it broke down and flipped that double bottom measured move as resistance. At that point, you just keep letting the trade ride. Again, you have your stop loss move down and so on. And you just keep going, and you're looking for signs of a reversal, so that way you know when to take the majority of your profits and start potentially eyeing trading the other way. One thing I love to mention in my Telegram group all the time, especially if I'm actually showing them trades that I'm making or at least tracking on the 1 minute or 5 minute time frame, is I like to say I'm looking for clues. So in this case, I was looking for clues of when to basically close or take the majority of my profits on this short that I had opened up back up here, you know, around the 20,300 level, right? Well, we had enough data at a certain point to see that we had created a falling wedge, right? So at that point, you're just looking for a break of the falling wedge. And then what I call bottoming patterns, which be double bottoms or higher lows. What I always say when you're trading a falling wedge pattern is you want to see a breakout of it where the last high inside the pattern, which in this case, if we draw this maybe just a little differently, like something like that, that would be considered to me the last high in the pattern. Obviously, you had this, you know, there's a high here, there's a high here, comes down, there's this high here. This is the last high, right? But then it breaks out, puts a higher high in. So then you start looking for the last low that was in the pattern, which was down here. Can it put in a higher low than that after breaking out of the wedge, or potentially a double bottom? Well, it basically did a tiny bit higher low, but we'll call it a double bottom. Well, it's not that I suddenly close my entire trade there, but once I start seeing signs of a bottoming pattern, or what I would say is a reversal pattern, this point I'm in a short, and you know, I don't want to give away my profits. I'm already slightly in profit, but the minute it breaks out of that wedge, then I go up to the last high before the high that was in the last within the wedge, right? So you have this breakout to this high. At that point, I'm going back to this high, and just above that, I move my stop loss there now. Now, granted, I was using leverage. This was a small percent overall move, but when you're using leverage, which you can watch my video, I was using 10x leverage on this short, so you know, a 2 or 3% move for me represented a 30% move, and it wasn't even a 2 or 3% move, actually. Altogether, when I did this trade, it was just opened it at just over 20,300, and it ended up getting stomped out eventually, well, actually, right around here. So that was a 2.5%, 2.3% move. So for me, that would have been a little over 20%, right? And that's the thing, is that at that point, I don't know if this is actually going to be the bottom temporarily. It's just that's the way you're looking at it. You're looking for temporary bottoming patterns. At that point, I closed 50% of my profits once I saw this double bottom, moved my stop loss back down to just above this high inside the wedge, and then I waited for more data to decide whether or not I wanted to also long the coin, right? Now here's where it gets tricky. I actually have two different Kucoin accounts, and I mentioned in a previous video that sometimes I like to open one long while I still have another short writing, and this was an example of where I did that. Now I guess I probably need to speed this up a little just so this video is not 9 hours long, but at any rate, here's what I started looking for on the reverse end. Just like up here when you had this double top, and it was confirmed once this neckline right here broke down, right? Once this broke down, that confirmed the double top. Then we started looking at the measured move, and we just started to ride our short and take it level by level. The reverse is true here, where it put in this essentially double bottom. This was the neckline, and once it flipped that as support, it hadn't quite wicked up enough to close out my short at that point, because again, my stop loss was back just above here. But on my other Kucoin account, I opened up a long at this point at around 19,000. I actually didn't quite nail the move. I never nail the bottom. I mean, I've been very transparent about that. But at any rate, I opened it up around 19,000, like 670, I want to say. So I think it was, yeah, right about here. I think it was when this little level right here flipped as supports when I opened it. So I let it ride up here and come down. I opened it around here. And at that point, you know, I'm just waiting to see if this long, you know, which one's going to close out first. Where did I put my stop loss for this long? Back just below the neckline of the double bottom. So back just down here around 19,500, which obviously meant that if I were to get stomped out on that, where my entry was, I was only going to lose around, you know, less than 1%. Now on this one, I was actually only using 5x leverage, which meant for every percent, you know, I make 5%. And here is the last thing that I wanted to go over just in today's video. Now this is also answers the question of a guy that I talked to in my Telegram trading group that was kind of asking me today about how you know when a trap is confirmed. You know, and just to be very transparent, nothing in trading is ever 100%. In fact, you're usually happy if you can get the odds stacked around 60 to 70% in your favor, which it's just like gambling but having higher odds than the house, right? Like if you could go to the house, or if you could go to the poker hall, or if you could go to the casino is the word I'm looking for, and you knew that you could get your odds between 60 and 70% in your favor, or even 55%, right? At that point, you have the edge, which is something that's very rare. In fact, damn near impossible when it comes to a casino, right? Then you'd have a far higher success gambling, right? Because you know, you'd have the edge, which that's what this is. I'm not saying trading is gambling per se, but it kind of is. It's just gambling where you have more of an edge than, you know, you would actually have at a casino. But anyway, he was asking about a bear trap or a bull traps or bear traps and how to confirm them. Well, so when I was writing this long, you know, I had alerts set at each of these levels. Once it hit this level, which again was this previous level on my short. Now, obviously my short got stomped out again, you know, once it hit this above this level here. But then I was on my other Kucoin exchange, and I'm in a long at that point that I'd opened up down here, right? Well, this is the first level that I had an alert set for to decide to move my stop loss up. Once it triggered there, I moved my stop loss up to break even at that point, meaning that worst case, I couldn't lose any money. Again, that's how you manage risk. It flipped that level. This level up here is obviously where I had my next alert. This is where I plan to take some profits. I wasn't sure if this would be able to break through here. Obviously, back here, it acted as resistance once, rejection, twice, rejection, and ultimately that's what led to the huge rollover where I was shorting the coin. So at any rate, I didn't know what was going to happen there, and you can see that it did get rejected first there. But at the bottom of that range, I had an alert go off. At that point, I moved my stop loss clear up to just below this level now, so I'm in profits at that point, you know, by a good 2% almost, I believe it was, from my entry, which was 10% because I was using 5x leverage, right? So 2 times 5 is 10. And then at that point, we just waited to see how price action interacted with this level. Well, guess what? It broke through. Now, there was even some volume to confirm it, right? So this is starting to look like, hey, it wants to make a leg higher. We had some volume come in. It broke above. You know, at that point, I'm looking to potentially add back into my trade, right? Because I'm already in profits. I've made some money. I took half my profits and moved stop loss up toward it's even in profits. At this point, that I'm thinking, hey, this is going really well. Well, here's where you saw the clue to close this trade and even potentially short it. Now, the short, to follow this, I think I told him I took it, but I looked back just a bit ago. I never did take it, so I don't know why. I guess I thought I took it, but I know I planned to take it. I did not take the short. I believe I was just busy doing some stuff with family or whatever it was. But at any rate, this is where you could have seen the clues that, hey, this was ultimately a small time frame bull trap, right? You had these 5-minute candles breaking above. But if you scroll over to the 1 hour, it paints a whole different picture as to what happened when it hit that level, right? On the hourly, you can see back here, price action clearly wicked up to that level, but got rejected, rolled over, right? Wicked up just barely below that, but almost the same spot, got rejected, right? Well, as it comes back up here on these hourlies, sure, the bodies of these candles got a little higher, but as far as this wick, you want to see above these wicks a candle body close. That's your first clue that a breakout could be happening. And what I told him is on something like this, I would be looking for at least 2 straight to close, and potentially the second one to even be stronger than the first. Well, in this case, clearly that did not happen. You had these bodies, you had this huge wick that went up to 20,750, which is also another concept people trade on. It's called long wick reversal. When you see a wick like this, where the majority of the candle is just that wick, clearly this showed a huge amount of selling pressure. But if you even just ignore that, or you didn't know how to trade that concept, the bigger thing to me was that this body of this candle closed below the level. The next one, which is the one, you know, that I said kind of confirmed in this case, a bull trap, which is what this ended up being, closed below as well. And I told him this would have been the candle I would have opened the short on, following the same rules as back here all over again. Stop loss back up here. Actually, in this case, I would have put it just above this wick. You know, you always want to kind of take the last high in this case and just go just above that. That would have only been a max loss. You know, let's just say if we opened it in the middle of this candle, only be a max loss of around 2%. If you're having to put a little bit higher stop loss in this case on the higher end of percentages, in that case, I just use lower leverage, you know, so I would have probably shorted that with 5x. That way, that 2% would only be a 10% max amount of that, you know, whatever I put into that trade, I could lose. And then again, you just start the whole process all over again. And the last, I guess, shield that I wanted to throw out there again was my Telegram group. Please see the link in the description for that. Our community, it's been a little stagnant recently, but overall we've got, you know, 10 or 12 guys, 4 or 5 that are fairly active that, you know, post charts and we discuss things. We have a chat section, and you know, if I'm taking trades or tracking things like this, I keep people updated in the Telegram group. I post chart after chart sometimes if I'm tracking a 1 minute and 5 minute time frame. Probably drives them nuts, I'm sure. But at any rate, obviously this isn't something I talk about a lot on YouTube because it's going to be irrelevant by the time you watch it, especially on these small time frames. But just know you can do this on larger time frames as well. But if you're looking to learn how to kind of do this on smaller time frames, see that link in in the description and come hang out with us in the Telegram group. And it looks like that's going to wrap it up for today. Just a reminder that later this week, not entirely sure exactly what day, but sometime in the next 2 or 3 days, me and the commissioner of Alpha Commission, goes by the name Skyfi, will be putting together that video that's how to leverage trade on the exchange BitGet. So be looking out for that. As far as everything else goes, if you are liking the content that I am trying my best to provide to you, please remember to like and subscribe, and we'll catch you tomorrow. It's T-A